What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. Okay, so let's make a full breakdown of the situation that we currently have on EURUSD. Now, why do I want to speak about EURUSD in today's video? Because the structure did change quite a lot from our previous breakdown. So it's definitely time to make an update and see where we can be looking for the next potential opportunity on it. Now, as usual, I will be keeping this analysis as educational as possible. So first, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders. So what the biggest hedge funds and the biggest speculators in the market are doing. And by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we can be looking for the highest probabilities opportunities on EURUSD. Now, starting here from the monthly time frame, what we can see now here on the monthly, we can see that the market has just provided a very strong impulse to the upside, followed by this correction. Now, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has provided a perfect 50% Fibonacci retracement before getting rejected to the upside, as we can clearly see. Now, if you're asking yourself, okay, but why has the market retraced exactly to the 50%? Now, the reason for that is that the 50% was the Fibonacci level lining up the best with the structure. In fact, the previous monthly high is this area here, which is basically the previous resistance, which, now that the market has broken it to the upside, is turned support. So here what we actually had was previous resistance turned support in confluence with the 50% Fibonacci retracement taken on the impulse, creating a confluence of support from which we definitely expected the market to provide a rejection to the upside. So here in the monthly, everything looks quite bullish. And there is definitely the possibility to see the market complete this impulse correction and impulse pattern to the upside, and for the market to provide another higher high here on the monthly time frame. Going down on the weekly time frame, what do we see? Now here in the weekly, we can see that at the moment the market is more or less moving inside of this channel. So basically what we're creating is a corrective phase after the very strong impulse that we had. And after a corrective phase, what you expect is the continuation to the upside. So overall, what we see on the monthly and weekly is more or less the same from a directional standpoint. We do see the possibility of a continuation to the upside. If we look at the horizontal structure that the market has here on the weekly, we can see that at the moment we're testing exactly the previous weekly low. In fact, from here the market had created all this move to the upside, confirming that this area was quite strong supply, actually quite strong demand, and currently we're testing again the same demand, from which there is definitely the possibility to see the market get rejected to the upside. So here in the weekly, we have created a channel to the downside, so a corrective phase to the downside, and we're currently testing quite strong demand, from which there is definitely the possibility to see the market get rejected to the upside. Going down on the daily time frame, what do we have? Now here on the daily, I had spoken about EURUSD quite a few times in the past. I spoke about EURUSD after the creation of this overextended W formation. When the market was here, I made a full breakdown explaining all the reasons for which from here we expected the market to provide this move to the downside. And in fact, that is exactly what the market did. Then we had the creation of this W formation, and from here, I made another breakdown explaining all the reasons for which from here, we expected the market to provide this move to the downside. And again, that is exactly what the market did. Then we had the creation of this M pattern, and from here, I made a full breakdown explaining all the reasons for which we expected the market to create this move to the upside to complete the pattern at the neckline. And again, that is exactly what the market did. Then we had the creation of this M pattern, and from here, I made a full breakdown explaining all the reasons for which we expected first the move to the upside and then this continuation to the downside. And again, that is exactly what the market did. Then from here, I made a full breakdown explaining all the reasons for which we wanted to see the market create this move to the upside. And again, that is exactly what the market gave us. Then we had the creation of this M pattern, and from here, I explained why we wanted to see the move to the upside. And after the move to the upside, I explained why. I wanted to see first a retracement and then the creation of a higher high. And again, that is exactly what the market did. And by the way, I will link in description all this previous analysis so you can go and check it out for further reference and more free education. If you have any requests for other breakdowns, make sure that you leave it in the comment below, and also make sure you like and subscribe. Now, I had created a breakdown on EURUSD quite a few days ago explaining why if the market would have actually created an impulse to the upside after a retracement, we could be looking for the continuation to the upside. However, the same day, the structure changed completely because the market didn't create an impulse. Instead of closing bullish above the previous high, the same exact candle closed back below the previous high. And as you know, by definition, an impulse needs to create a higher high. However, in this case, instead of creating a higher high, the market closed back below the previous high. So all this move to the upside was invalidated the same exact day in which I had published the video when the market was here, obviously invalidating the full idea. The market then obviously created a move to the downside, which brings the next potential opportunity, because in this case, we didn't even have the possibility to put EURUSD on our watch list with students. We didn't even start looking at it because the market simply didn't provide the impulse. And now we had the move to the downside, and currently what we can see on the daily is that the market has just provided this M pattern. Now, generally speaking, after an M formation, what you want to see is the market create a move to the upside to go and complete the pattern at the previous support turned resistance. So there is a potential longing opportunity here on the daily time frame. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, we can see that with the last reports, overall, net positions have been more or less remaining the same. In fact, we went from having 137K net positions, we went to 140, now we dropped down to 138. More or less, we're not seeing any big shift of the net positioning. Now, if you're asking yourself, but why? The reason why is because, as we have already seen on the weekly, this is simply a correction. And from a higher time frame perspective, we still want to see the continuation to the upside. And currently, we are still sitting with 228K long positions and 90K shorts. So a massive amount of longs compared to the shorts. So there is definitely still the possibility to see more continuation to the upside, considering that we are still seeing longing. So even though the market overall is clearly creating a move to the downside, during this move to the downside, we are still seeing longs that are continuously getting added, which means that the continuation to the upside should start quite soon. So how we will be approaching this potential longing opportunity with students? Now, as usual, the monthly, weekly, and daily timeframes, those are the best timeframes for the direction of the market, but combined with the COT data. But when it comes to confirmations and entries, the best time frame is the 4-hour and obviously intraday timeframes. So with students, what we will be doing is monitoring price action during this move to the downside from a 4-hour perspective and lower, waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point, we will be adding EURUSD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete the pattern at this previous support, which is now turned resistance here on the daily time frame, which is also the completion zone of the pattern itself. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also comment below and let me know which pairs you would like me to cover in my next videos. Also, make sure you go and check out the mentorship program. It's a very complete program. The link is in the description. First, you get all the rules of my rule-based strategies, and then you trade the strategies with me. Each and every day, you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as having me answering all your questions every single day, including the weekend. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.